Now speaking, Mike Spencer, Executive Vice President, Investor Relations. Mark Benioff, Chair and CEO of the company, began the conference call by thanking those present and introducing his colleagues. He continued to explain that today's discussion will include non-GAAP measures and that reconciliations between GAAP and non-GAAP results and guidance can be found in the earnings and press release. Benioff also warned that some of the comments may contain forward-looking statements which are subject to risks, uncertainties, and assumptions that could change. He added that should any of these risks materialize or their assumptions prove to be incorrect, actual company results could differ materially from these forward-looking statements. Finally, Benioff concluded by referring to the SEC filings for a description of the risks, uncertainties, and assumptions and other factors that could affect their financial results. Now speaking, Mark Benioff, Chairman and Co-Chief Executive Officer. Salesforce had a very successful Q1, significantly exceeding their margin target of 27.6%, up 1,000 basis points year-over-year. Revenue was $8.2 billion, up 11% year-over-year and 13% in constant currency, and operating cash flow was $4.5 billion, up 22% year-over-year. They have raised their non-GAAP operating margin for FY24 to 28%, an improvement of 550 basis points year-over-year, and are keeping revenue guidance at $34.5 to $34.7 billion with 10% growth projected year-over-year. This success is attributed to the company's transformation, which focuses on restructuring for short and long term, reigniting performance culture, prioritizing core innovations, building stronger relationships with investors, and scrutinizing every dollar of investment. Salesforce also launched Einstein GPT, the world's first generative AI for CRM, where customers can connect to multiple large language models. They are also introducing Slack GPT and Tableau GPT, simplifying data analysis for users and providing AI-driven insights at scale. All of these initiatives are powered by an AI trust layer which ensures customer data is secure and remains compliant. Salesforce is looking forward to continuing their AI revolution with $250 million invested in their new AI venture fund. Now speaking, Brian Milham, President and Chief Operating Officer. Salesforce had a strong first quarter, continuing to transform and remove complexity in their business operations. They have defined guidelines for remote offices, and the energy is great when visiting offices around the globe. Their focus on performance, culture, and operational excellence contributed to the strong results. Customers are scrutinizing deals more, elongating deal cycles and compressing deals, particularly in SMB, creating close and self-serve revenue streams. Professional service saw less demand for multi-year transformations and projects being delayed as customers focus on quick wins. Sales performance management, sales productivity, and digital service all grew annual recurring revenue above 40%. Customers are expanding adoption of Salesforce clouds with 90% of Fortune 100 using 5+ clouds. AI is top of mind for customers, and Salesforce is perfectly positioned to help them with their AI plus data plus CRM strategy. Core offerings remain resilient with 9/10 of their top deals including sales, service, and platform. Industry clouds grew ARR above 50%, and customers are looking for fast time to value. Generative AI products are catalysts for future growth, and Data Cloud had great wins in the quarter. Integration and automation continue to be efficiency drivers, and Tableau is unlocking customer data and delivering actionable real-time insights. Slack has an ambitious product roadmap with generative AI at the center, and they had great wins in Q1. Salesforce's margin guidance is increasing, and they will host AI Day in a couple of weeks. Now speaking, Amy Weaver, Chief Financial Officer. Summary. Salesforce reported an 11% year-over-year increase in revenue to $8.2 billion, driven by strong momentum in MuleSoft and more resilient core performance. Geographically, they saw strong new business growth in parts of EMEA and LATAM, while the U.S. experienced continued pressure. Manufacturing, automotive, and energy all performed well, while high-tech and financial services remained under pressure. Salesforce is now largely completed with restructuring and are executing against three key pillars: optimization of resources and organization structure, product investment prioritization, and operational rigor. Non-GAAP operating margin finished strong in Q1 at 27.6%. For fiscal year 24, Salesforce is holding their guidance of $34.5 billion to $34.7 billion in revenue, representing over 10% growth year-over-year in both nominal and constant currency. Non-GAAP operating margin guidance has been raised to 28%, representing a 550 basis points improvement year-over-year. This includes reinvestment in targeted areas, namely in R&D. GAAP EPS for fiscal year 24 is expected to be $2.67 to $2.69, including estimated charges for the restructuring of $1.11. Non-GAAP EPS is now expected to be $7.41 to $7.43. For Q2, they expect $8.51 billion to $8.53 billion in revenue, growth of approximately 10% in both nominal and constant currency. They anticipate CRPO growth for Q2 to be approximately 10% year-over-year in nominal and constant currency. GAAP EPS for Q2 is expected to be 79 cents to 80 cents and non-GAAP EPS of $1.89 to $1.90. Salesforce is focusing on shareholder return and disciplined capital allocation and will fully offset stock-based compensation dilution through share repurchases in fiscal year 24. Now speaking, Mike Spencer, Executive Vice President, Investor Relations. Analysis. After thanking Amy, the speaker states they will move to questions and asks that each person only ask one question in order to respect others on the call. He then introduces Srini Talapragada, Head of Engineering, who will be joining for Q&A today. The speaker then invites Emma to begin the Q&A session. Evercore IC analyst Kirk Materne inquired, Mark, what opportunities do you see for monetizing AI within your product base? Mark Benioff replied, this is an incredible opportunity for not only Salesforce, but the entire industry. GPT has revolutionized many lives, and now companies must transform to become AI first in order to stay competitive. We have been at the forefront of this movement with Einstein's more than 1 trillion transactions delivered this week, primarily predictive transactions built on machine intelligence, machine learning, and deep learning. Now, however, deep learning has become more sophisticated and generative, allowing us to develop an entirely new platform for growth. Yesterday, we showed leaders in the industry what Salesforce can do, including Tableau, Slack, and our financial services cloud. With these tools, bankers can rewrite mortgages and other services with ease, while staying compliant with regulatory standards. This is why we've developed the GPT Trust Layer, which will allow us to reconceptualize our product line. The result is an opportunity for customers to transform their business, and an opportunity for Salesforce to also transform itself. AI is ushering in a new super cycle where everyone must be AI first. Morgan Stanley analyst Elizabeth Porter inquired, are we seeing disruption from the sales enablement process reboot, and if so, how is it included in guidance? What other factors could pose a challenge to achieving this quarter's 10% CRPO guidance and 1 point pro services headwind? Mark Benioff replied, my response to the question is, our Q1 was undoubtedly tumultuous, but our team's hard work and dedication led to remarkable results. Despite the disruption, our sales organization maintained a very high level of productivity. Brian will now provide further insight into our strategy for the year. Brian Milham replied, Mark and Elizabeth, thank you for the questions. We've taken proactive steps to enable our A's, NSCs, and leaders to understand our product portfolio and the entire customer 360. We have invested heavily in training and educating our teams on the new wave of AI technology, so they can effectively articulate our value proposition to our customers. Our CEOs around the world are engaging with us on generative AI, and we are excited about the opportunities it presents. Amy Weaver replied, we are seeing some pressure from the macro environment and, more specifically, from professional services. Our customers can contract for professional services on 2 different ways, time and materials or a fixed-fee milestone basis. CRPO only includes revenue from fixed-fee deals. Currently, we're seeing customers choosing to contract on a time and materials basis which is not included in our CRPO, creating a double pressure and a 1 point headwind to CRPO for the quarter. Bank of America Merrill Lynch analyst Brad Sills inquired, my question for Brian is, are you starting to see an increase in sales productivity as a result of the efforts taken to improve efficiency? Is this resulting in larger deals and greater pipeline growth? Brian Milham replied, thanks for the question, Brad. We're focusing on our productivity and investing heavily in our enablement efforts. We're also examining how to increase average deal size by combining related products into single transactions. We're also looking at self-serve options for our smaller customers and ways to move our account executives upmarket. We saw strong performance in large deals in Q1 and feel good about our ability to execute on those. Our challenge lies in velocity business and SMB transactions. We have a focus on driving productivity with our Q2 and Q4 plans. Jefferies analyst Brent Thill inquired, Amy, what caused the significant deceleration in Americas compared to other regions? Amy Weaver replied, thanks Brent, for the question. The Americas saw a 10% year-on-year revenue growth decline compared to 17% in EMEA and 24% in APAC. We're seeing more pressure in North America, but pockets of acceleration in EMEA and LATAM, such as Switzerland and Brazil. Brian, do you have anything to add on this? Brian Milham replied, Sure, in Q1 our Americas business felt the headwinds from both our technology and financial services companies, which resulted in slower growth than we had anticipated. JP Morgan Chase & Company analyst Mark Murphy inquired, Mark, given the IT budget purging and Salesforce's headcount optimization, do you think the next recession could be easier to navigate than in prior cycles? Mark Benioff replied, I believe that the pandemic of 2020 was a massive super cycle of tech buying, something we had not seen before. Comparisons to 2021 must be made in light of this huge surge, rather than against 2008 or 2001, when there were no such mega cycles. I'm confident that the customers who bought large amounts of tech during the pandemic have now absorbed it and the AI super cycle is about to take off. Piper Sandler analyst Brent Bracelin inquired, what resonates with customers about Salesforce's generative AI journey? Is it the data layer and customer 360 message, the app layer around sales automation functionality, or something else we'll hear about in June? Mark Benioff replied, our AI strategy is rooted in security, compliance, trust, and governance. We also prioritize openness as we partner with companies like OpenAI and invest in entities like Anthropic and Cohere to ensure our customers have the best solutions available. With this approach, we are able to guarantee that customer data is safe and secure at both the enterprise and user level. Srini Talapragada replied, Yes, Mark. 70 customers in the last quarter were interested in AI and trust. We are providing basic security measures like tenant-level isolation and zero-retention architecture at the LLM level. Customers have various compliances like GDPR, ISO, SOC, and FedRAMP to meet, and we are solving for that. We also address model trust with our innovation of grounding data on 360 data. Enterprise trust is managed with access control both before and after the query. We are optimizing for cost to serve and running a cost-optimized curve for high value. We have the Trailblazer platform for low/high code development and job courses optimized for each industry. We already do 1 trillion transactions per day and import 7 trillion records into Data Cloud monthly. We are providing guidance to deliver significant value to customers. Mark Benioff replied, Salesforce is actively exploring the use of deep learning language models such as ProGen, Code, Blip, and CodeGen in our platform. We are also monitoring commercial offerings such as OpenAI and Anthropic, as well as open source models like Llama. Ultimately, we will decide which model to use based on performance relative to our specific goals and objectives. Srini Talapragada replied, I believe our AI research team is one of the best of its kind models, leveraging state-of-the-art technology for every use case. We strive to use the most efficient model, whether that's an internal model or a public model like OpenAI, as well as keep track of new advancements so we can continually optimize performance. Our goal is to provide customers with secure, trusted gateways to access the best model for their needs, while taking care of all compliance and trust issues behind the scenes. This is our Salesforce promise, to feature-proof our customers so they can focus on their business cases. Mark Benioff replied, the key to delivering our GPT trust layer and grounding techniques across regulated industries is the combination of our proprietary technology and our comprehensive understanding of the regulations governing the use of AI. Our technology allows us to provide safe and secure data storage, while our knowledge of regulations ensures that customer data is used in a compliant way. Srini Talapragada replied, our key to success is the innovative techniques we're applying starting next month. These involve generation and grounding our data cloud, which contains 360-degree customer data that allows us to build models. We've also included a metadata platform to give us a semantic understanding of what our customers are aiming to achieve. All this, while maintaining trust, is the baseline for our new approach. Barclays analyst Raimo Lenschow inquired, can you explain the factors that led to the improvement in profitability and rate guidance? Amy Weaver replied, Raimo, the Q1 results of 27.6% were driven by our January announced restructuring as well as our disciplined reinvestment strategy. This has allowed us to expand margins to 28% for the full year and put us on track for a 30% margin in Q1 of next year. The transformation is divided into 2 stages. We are now seeing the benefits of the initial transformation and are continuing with our comprehensive operating and go-to-market review, which will enable the second phase of our transformation. This will bring long-term benefits over the next few years beyond FY24. Brian, do you have any additional insight? Brian Milham replied, in response to your question, we took action in Q1 and are looking at long-term solutions to drive efficiency in our organization. We're exploring resellers as an investment, leveraging self-serve for the low end of the market, and tapping into emerging markets for efficiency gains. Additionally, we'll be focusing on process and systems improvement, as well as top plan design to achieve further efficiencies. UBS analyst Carl Kierstead inquired, Amy, what is the timing of the receipt of the Bain operational review, and have planned investments in R&D and AI increased beyond initial guidance such that you need to increase OPEX management to meet margin targets? Amy Weaver replied, thanks Carl. As I mentioned, we are close to completing our comprehensive operating go-to-market strategy. We have examined every element in detail and are now moving into implementation. We remain committed to our investments, particularly in artificial intelligence, as Srini has discussed. Our plans for managing operating expenses have not changed, we continue to closely monitor them. Goldman Sachs analyst Kash Rangan inquired, Mark, could you explain how Salesforce's generative AI capabilities will create opportunities for the company and how customers can benefit from its increased productivity? How will it affect pricing? Mark Benioff replied, thanks, Kash, for the question. Our AI vision is to build and develop new products that use generative AI to help our customers better connect with their customers. I'm excited to discuss this further with Srini. Generative AI is a way of using advanced machine learning techniques and natural language processing to create new products or augment existing ones. It can be used to automate tasks, such as segmenting a database, writing an email, or building a landing page. It can also be used to generate visualizations, like those seen at the Tableau conference. Furthermore, it can be used to provide customers with additional value by automating complex coding tasks, such as writing Apex code or other code. Using LLMs, long-term memory networks, customers who may not have computer science backgrounds can write sophisticated code. This will increase productivity and enhance everyone's skill set. As always, we must ensure trust, data integrity, and governance with any new product that we develop. We want to work towards becoming number one in AI CRM and offer more value to our customers. With generative AI, we can do just that. Srini Talapragada replied, I think that's really where the value of AI technologies is going to be. AI technology is on a continuum from predictive to generative, with autonomous being the ultimate goal. Currently, the most common use case is self-service bots or agent assistants in call centers, which can help increase productivity. We have implemented our own code LLMs and are already seeing a 20% increase in productivity. This is a great example of the value AI technologies can bring. Mark Benioff replied, we have seen a 30% increase in productivity from our engineering teams, thanks to the use of our own LLMs. This has been incredibly beneficial for the company and is reflective of our commitment to utilizing innovative solutions. Srini Talapragada replied, we are seeing upwards of 20 to 30% savings in implementation costs for customers who utilize our Einstein GPT assistants. This technology bridges gaps in local talent pools and provides a way to auto-remediate up to 60% of incidents with fine-tuned models. We believe this is just the beginning of what's possible, and trust will be built as we continue to improve model performance. Mark Benioff replied, it is a common misconception that consolidating data into an LLM, language-based learning management system, will automatically create a corporate knowledge base. In reality, it takes a combination of organization, structured access, and a clear understanding of the data in order to create and maintain a successful knowledge base. Without these elements, data can become disorganized and inaccessible. Srini Talapragada replied, LLM, layered learning machine, technology is a powerful tool for solving complex trust issues related to data sharing and automated account reporting. LLMs provide a layer of privacy and security to ensure customer balances are not mixed. Additionally, there are many use cases that offer low-hanging fruit for the initial phases of this assistant model, such as public data access and improved productivity. We have developed techniques to further enhance the capabilities of LLM technology, particularly in the search area, but should temper expectations when it comes to complex automated tasks. Mark Benioff replied, we are thrilled to share our innovative technology with you at AI Day in New York City on June 12 and Dreamforce GPT. We look forward to seeing you there and thank you for joining us today.